Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn about how to identify patterns and which time frame we should use to marking the patterns. So, in a price action, there are a lot of type of patterns like head and shoulder, double top, double bottom, rise as, falling base, descending, ascending. There are so many patterns, but you don't need to focus any kind of pattern. You need to focus on few patterns, which is continuation pattern, and that's called a flag pattern. Okay. So our methodology completely means we are working with a trend direction. If market momentum is a bullish and bearish, then we are working. If market looking for the reversal, you don't need to trade because most of the time most of the patterns are fail due to reversal. Because most of the patterns fail due to reversal, because reversal nobody can expect where is market going on. Nobody don't know where is top and bottom. That's why people are trying to buy and sell top and bottom and they fail. So you don't need to use any kind of reversal pattern. We are working with trend continuation pattern only, which is a very important is a flag pattern. Flag pattern are very popular and very profitable pattern. So let's see how we can identify them and which time frame we should use to identify the pattern. First of all, you need to understand how looks like a flag pattern, and before to marking any pattern, you need to understand what is impulse and correction, which is already covered in a previous chapter. First of all, identify the impulse and correction, and before impulse and correction, you need to understand where is market going on. Like market is a bullish and bearish. So how we can identify them? Simply, if market creating higher high, it means this is a bullish structure, and if market creating lower low, it means market momentum is a bearish. Simple, right? Once you identify them, then you can simply identify our impulse and correction, because if market momentum is a bullish and creating pullback, again going higher high, again pullback and again going higher high. So this is a bullish structure here, and if market is a bullish and this is our previous higher high, and this is a previous higher high, and this is a higher low, right? And this is a structure like in terms of the higher high and higher low. But when you see, this is our impulsive wave, right? When market trying to go higher in an impulsive wave and people are buying, and also a lot of big players are buying introduced here, so that's called impulsive wave. And again, what happened here? Market takes some rest and people are still buying and selling in a specific zone, and then again market do continuation. So this is impulse and correction, and you need to identify our continuation pattern at this point, right? So this is our continuation pattern here, looks like a flag pattern, right? Let me show you exactly how we can identify and which time frame we use to marking our flag pattern. In this case, you can see here, this is our Bitcoin chart in a 1 hour time frame. Market momentum was bearish and now turned into bullish. Why? Because market is a bullish here. So how we can identify them? First of all, you need to identify any specific time frame. You can use any time frame like 1 hour, 15 minute, 4 hour, daily, weekly, monthly, any time frame you can use. There is no specific. You can use even 5-minute time frame, but I will suggest you in your starting, start from 1 hour and 30 minutes starting. Okay. Once everything is working for you and you want a multiple entries and you want a lot of entries in a lower time frame, then you can switch in a 5-minute time frame. Okay. But in starting, I will suggest you start from 1 hour and 30 minutes. Once everything is a fit as per your plan and as per your trading style, then you can continue. Otherwise, it's depend on your availability. If you are available entire day, then you can use 15-minute time. Everything is working for you and everything is a fit as per your plan, then you can switch in a 5-minute time frame if you need. If you don't need, then you don't need to switch on a 5-minute time frame. You can continue with 15-minute and 30 or 1 hour time frame. Okay. So this is a clear that is time frame you should follow. It's depend on you. If you are day trader, then you can use 15-minute time frame, and if you want to trade for like 24 hours, then you can use a 1 hour time frame. Okay. If you want to trade hold for few days, then you can use 4 hour time frame. Okay. And if you want to like instant buying and selling, then you can use 5-minute time frame. But in a starting, you don't need to 5-minute time frame, because in a 5-minute time frame, price create a very fluctuation in a lower time frame. That's why everyone not able. Okay. So you need to focus on a little bit higher time frame. If everything is working for you, then you can shift in a lower time frame if need. Otherwise, you don't need to shift in a lower time frame. Okay, let me show you exactly that how we can identify our chart pattern and how it looks like, and which criteria you should follow to mark our patterns and marking our structure. Okay, let's see. Look at this one. Market momentum is a bearish. Okay, and now turn into bullish. So this move happen here. Continue. You need to identify our structure. If structure is a bullish, it means we need to identify impulse and correction. So correction is a zone when we can mark our flag pattern. So look at this one. This is our previous structure here. Market was completely bearish in a downside, and we are expecting that market continue looking for the downside, look like this one, right? So before this move, look at this one, what happening here. This is our last correction here, right? So this is our corrective phase, which is market broken and pushed downside. So after this, what happening here? We are expecting that again market create any like continuation pattern, then we can sell, right? So this is our continuation pattern, like flag pattern, and this can be a different shape and size. But you need to understand this only happen after impulsive wave. Once market broke this one and create impulsive move, and again we are looking here for the sell to create our correction phase, or like you can say a flag pattern. Okay, so after this impulsive move, we are looking for the sell and to marking the our corrective phase, this one, right? So this is impulse and correction, and this is our flag pattern here. What happened here in this case? You can see impulse, and this is a correction. And if market broke this one and create any bearish indication, then we can sell, which will be covered in next upcoming chapter, that how we can enter. But in this chapter, you need to identify how we can mark our patterns. Okay, you need to only mark our bearish and bullish pattern. Otherwise, you don't need to mark any reversal pattern like double top, double bottom, falling wedge, channel, and descending, ascending, nothing. Okay, you need to focus only on flag pattern, right? So this pattern is a failed and continue going higher high to create an impulsive move to the upside. If market create impulsive move, it means we are waiting here for the sell, right? Now we are waiting here for the buy because market create impulsive move and we need to wait for a correction. And if market create a valid correction, then we can sell. Then we can buy to the upside because market trend direction has been changed. Like this is our bullish pattern here. Bullish pattern breakout and continue going higher high, because before this pattern, this was impulsive wave and correction, and again we are looking here for the buy to the upside, right? What happened here? Again market created another flag pattern here. Look at this one, right? And why we are marking this one? Because in this case you can see market not broke the previous high, right, and continue pushing upside and create internal pattern here. Again we are expecting that market can continue go higher. So what happened here? Again breakout and again continue go higher, and again after this impulsive wave, market create another flag pattern here, and this one looks like a corrective wave, and this move only happen after impulsive wave. So this is an impulse and correction, and again what are you looking here? We are again expecting that price continue go higher, so price continue going higher high as we expected. Okay, again what happened here? And sometime, so again what are you looking here? We are looking here for the buy. If market create correction and give any continuation pattern here, then we can buy here, right? But market not create here any kind of reversal, but market not create here any kind of continuation, and market push downside. And why market push downside? You need to understand. You can understand if market continue going higher high after this impulsive wave, right? Market create any, like it looks like this one. I'm going to show you exactly what I'm trying to explain here. If market momentum is a bullish, right, and take a correction, again continue go higher, again take a pullback, and this is a corrective phase, and after this broken structure and market take a corrective wave to go higher. So in this case, very highly chances market take a reversal. Okay, you don't need to sell here. This is just indication that market are looking for the sell. Okay, so in this case, if market create any like a continuation pattern here, so you need to check very carefully here that this is a valid entry or not. Okay, so you need to understand, if market go higher in a corrective wave, then very high chances that market create here any opportunity, then those are 50% of probability that market continue go higher and market can continue go lower in a downside, because this move showing a bearish and bullish indication, it means these are neutral condition. Okay, market is still trying to go higher, but sellers are active here. If market straightforward move to the upside, so this is a strong move, it means buyers are very heavily activate here. Okay, so I hope you understand what I'm trying to explain here, which is I already mentioned in an ebook that how we can identify them, right? So let's see what happening here. This was impulsive move, and again market push downside, and there is no structure form here, right? Market heavily or downside here, means impulsive go higher and impulsive or push downside. So you need to identify where is our continuation pattern, and when we can take entry here. Okay, again, what are you looking here? We are looking here for this sell. Why? Because this is our corrective phase here. Impulse and correction and take entry, and this was a valid loss here, right? Again, market push higher and market create a larger structure here, looks like this one, and this is our larger flag. Okay, why this is a larger flag? Because you can see this is our strong impulsive move, strong corrective phase, and we are expecting a continuation on the downside. So same thing happen here, and this is our larger flag. Why I'm marking this thing? Because market can create any kind of structure in terms of the flag pattern. Okay, flag pattern size can be a different. So that's why I'm marking the multiple types of shape and size patterns here, right? So this is impulse and correction, and again push downside, breakout and push downside, right? Again, what are you looking here? This is impulse and price create a corrective phase here, and again correction, push downside. So these are heavily selling momentum. It means there is no reversal indication still. So you need to wait for it to create another structure here. Like if market create here, so we can sell here. Otherwise, if market create here strong impulsive move to the upside and create any flag pattern here, right, and for the reversal, so we can continue go higher. So this is a possible scenario in a Bitcoin based on 1 hour time frame. But you need to understand that how we can identify our chart pattern in a different time frame. So this is a 1 hour time frame. You can apply in a 4 hour time frame, same thing. You can apply 15-minute time frame. You can apply in a 5-minute time frame. It's depend on you. Every time frame, like daily, weekly, monthly time frame, any time frame you can apply. Okay. So this is a 1 hour time frame. Let me show you exactly in a 15-minute time frame. Then I will show you in a different time frame. Okay. So this is our 15-minute time frame. You can see here in this leg, so many multiple opportunity here for the buy and sell. Why? Because when you search in a lower time frame, then you will see another structure. Okay. So in a lower time frame, market create multiple opportunity, but in a higher time frame, market take a lot of time to create the structure. But in a higher time frame is high probability. In a lower time frame, you will see most of the time market manipulate your patterns, your structure. That's why. Okay. So you need to start from higher time frame. That's why I'm saying this starting that you need to start from higher time frame, because higher time frame gives you more confident and more high probability setup, right? So in this case, you can see here, this is our 15-minute time frame, and market continue pushing downside, and everything looks like similar as we have done in a 1 hour time frame. And this was our bullish structure here, right? This is our bullish structure. Market continue pushing higher high, right? Break the structure, continuation pattern, break this one, again continue go higher. So same thing applicable in a bullish and bearish market right here. And this thing happen in a lower time frame, like you can see in a 5-minute time frame everywhere, right? So this is our impulsive wave right here, and this is our corrective phase here. Again, market continue going higher high. This is our corrective phase, right? So simply you can identify our impulse and correction in a very easily, right? You need to simply identify impulse and correction and impulse. This was happen here. But this is a larger structure in a 1 hour time frame, but in a 15-minute time frame, market already gave entry here and take a complete structure, and stop loss and target, everything is clear here, and very high chances we can get here to R very easily. So this is a reason to use like multiple time frame, like you can use 15-minute and 1 hour time frame. It's depend on you, right? So this is a very simple entry setup here, and same thing here. Again, market create another setup here, right? So this is a possible setup here for the buy and sell in a different time frame. This is our 15-minute time frame, and same thing applicable in a 5-minute time frame. You want 4 hour time frame everywhere, right? So this is our 5-minute time frame. You can see here, this is our market momentum is a bearish here. Before this bearish move, market was bullish here. Look at this one, how price is reacting to the upside. Correction, impulse, correction, again correction, impulse, again push higher and pushing downside, and this is a corrective wave. There is no strong impulsive wave right here. Okay, market pushing downside in a corrective wave, and finally market broke this structure right here. And again, we are expecting that market looking for the downside, and after this strong impulsive move, you can see multiple entries possible here for the sell like this, right? So you need to identify our impulse and corrective wave simply. First of all, identify trend direction. If trend direction is a bullish and bearish, then you need to identify our impulse and correction, and you need to identify the corrective phase, and then mark the structure and mark our flag pattern. So this can be very simple, and at least to marking any flag patterns, you need to at least multiple touch confirmation here. 2 times confirmation must be to marking any pattern. Looks like this one right here, and this is a value setup here, right? So this is a flag pattern here, and continue looking here for the buy to the upside because market momentum is a bullish here, right? So at least price must be tapped on 2 times, like lower lows and higher high connect, and must be price above a 50 moving average, which will be covered in the next chapter. Simply identify trend direction and simply again identify impulse and correction. After impulsive phase, you need to wait for it to create a valid structure. You need to wait for create a valid flag pattern. This can be a bullish pattern and this can be bearish pattern. If market not create any bullish and bearish pattern, then you don't need any other pattern. Like you don't need to trade for the reversal. You need to trade only continuation pattern, okay? Because continuation trend is a very high probability compared to the reversal. I hope you understand what I'm trying to explain, and for more information, for more details, you can also study in an ebook where I explain different types of category about a flag pattern and with a proper example. So I hope you'll understand and learn a lot of things, that how things actually working and which criteria you should follow to mark our patterns. If everything is clear till now, then you need to do some backtesting and practice on your chart on your previous data. Once everything is a fit and learn everything, then you need to switch on next chapter. Otherwise, you need to stick on this current chapter and practice 1, 2 and 3 chapter. If everything is clear till now, then you need to move on next chapter. Otherwise, no. Okay. So I hope you enjoyed the entire episode, and I will see you in the next chapter. Happy trading.